Hello and welcome to AI Market News by LM. Okay, let's just jump right into it. The US stock market, it just absolutely rocketed to an all-time high. A huge moment of triumph for investors, right? But, and this is a big but, while the markets were closed, tensions in the Middle East just exploded with a direct US-Iranian naval encounter. So the really big question we're tackling is this record-breaking market a genuine sign of strength, or is it walking straight into a geopolitical trap?
You know, on one hand, we have this incredible picture of market strength, all green charts and record-breaking numbers. And on the other, there's a serious geopolitical storm gathering that could just change everything in a flash. This image, right here, it perfectly captures the tightrope the market is walking right now.
So, here's how we're going to break it all down. First, we'll look at that record-breaking rally. Then we'll pivot to the geopolitical trap that sprung up over the weekend. From there, we'll try to get a read on market sentiment, see what's happening in the currency markets, and then wrap up by looking at what's on deck for the week ahead.
All right, let's kick things off with the good news. I mean, last week was, by pretty much every measure, a historic one for US stocks, all fueled by this powerful wave of optimism.
So get this, the S&P 500 closed the week at a stunning new all-time high of 7,126. And we're not talking about a little bump here. This was a major breakout. It capped off a period of incredible bullish momentum that had a lot of us thinking the worst of the recent uncertainty was finally over.
And it wasn't just the S&P 500, not by a long shot. The tech-heavy NASDAQ 100 went on an unbelievable 13-day winning streak. We haven't seen anything like that in over 3 decades. So that tells us this rally has some serious legs and momentum, especially in the tech world.
So who's behind this massive push? Well, it's the names we all know. The Magnificent Seven and other big tech giants have just come roaring back to life. After a bit of a slump, these behemoths have more than recovered their recent losses. They've basically put the entire market on their shoulders and carried it into record territory. But here's the twist. While Wall Street was popping champagne corks, a really dangerous situation was heating up in the Middle East. All that optimism from Friday, it pretty much vanished over the weekend. And then this headline from various news commentary just shattered the quiet. This wasn't just some threat or a warning shot. This was direct military action. The first major clash in a week-long blockade of the Strait of Hormuz, which is, as we know, an absolutely critical choke point for the world's oil supply. Just look how fast things went south. On Friday, the market was rallying on hopes of a ceasefire. By Saturday, Iran had closed the strait again. Sunday, boom, the US seizes an Iranian vessel, and come Monday morning, Iran says no peace talks. In just 48 hours, the whole story flipped from diplomacy to direct conflict. It's whiplash.
The market's reaction as soon as trading opened in Asia was immediate and obvious, a massive spike in energy prices. WTI crude shot up over 6%, and European gas surged more than 7%. That right there is the market pricing in a very real risk of a much wider conflict and serious supply disruptions.
Okay, so we've got these two completely opposite stories playing out. Record high stock markets on one side and soaring geopolitical risk on the other. To figure out how the market is even processing this, we have to look at investor psychology. Are we seeing fear or are we seeing greed?
And for that, we're going to turn to the CNN Fear and Greed Index. It's a really neat tool that kind of acts like a market psychologist. It takes 7 key indicators, blends them all together, and gives us one simple score to tell us if investors are getting a little too greedy or way too fearful.
Now, this index doesn't just look at one thing. It's a whole cocktail of inputs. It measures everything from market momentum to the VIX, which is often called the market's fear gauge, all the way to whether people are buying risky junk bonds or running to safer assets. It really gives us a full 360-degree view of what investors are feeling.
And this is the crucial point, isn't it? With the S&P 500 hitting a record high at the exact moment these geopolitical risks are spiking, well, it makes you wonder, is that greed reading a sign of rational confidence that this will all blow over? Or is it a sign of dangerous complacency with the market just ignoring some very clear warning signs? This tension isn't just contained to stocks and oil. No way. We're seeing the shockwaves ripple out across global currency markets, and they are often the first to react when things get tense.
What we're seeing here is a classic flight to safety. The US dollar is getting stronger because, in times of trouble, global investors see it as a safe place to park their cash. At the very same time, the Japanese yen is weakening pretty significantly against the dollar, getting close to that big psychological level of 160. This split right here tells a very clear story of rising global risk aversion.
And here's the hard data to back that up. You can see the dollar's strength against both the yen and the euro. These numbers show that the big players in the currency world are already repositioning, moving their capital into the perceived safety of the US dollar to ride out the storm.
So, with the board all set, let's look at the week ahead. The situation is incredibly fluid, and we've got several key economic events that could either calm things down or just add more fuel to the fire.
Now, looking at the economic calendar from investing.com, we've pinpointed a few high-impact events we really need to keep a close eye on. These are the scheduled moments that could really move markets this week.
Kicking off on Monday, we've got crucial CPI inflation data out of Canada, plus a speech from ECB President Christine Lagarde, which everyone will be dissecting for clues on European policy. Then on Tuesday, all eyes will be on the Senate confirmation hearing for the new Fed chair nominee. That could be a huge tell for the future of U.S. interest rates. And of course, running all week long, U.S. earnings season rolls on, giving us that real-time health check on corporate America.
Which brings us right back to where we started, to our central question. Are we just watching a resilient, historic bull run that can shake off global conflict like it's nothing? Or has the market's own euphoria and this record-breaking rally set the perfect trap, leaving investors completely exposed to a sudden, severe shock? I think the answer is going to be written this week. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching, and hey, don't forget to like and subscribe.